Morning. Oh, morning. It's been a crazy good week. Seems we are back up again. So I'll be handling a little introductory. So let me share with you my screen so that we check a little bit of what we'll be doing today. So hope I'm visible. Can you hear me? So let me see. Checking my notes. So give me a few guys. Here's my notes. Here. So share screen. Okay. Seems we should be getting started. I'm recording. It's our first class this month. I'm just introducing to you the markets and basically what it is we'll be handling. It's been quite a good run. So far, so good. Rates are going down. The variant, at least it's becoming controlled. So give me a few seconds, guys. So that we get started. Okay, just a few. Okay, we are back. So let's get started. Nelly, welcome. So I won't take much time, guys. So let's have a look. So we should be doing introduction. So I'll be using my manual. Let me use my manual. It has better. There we go. So I'll be introducing to you the syllabus and what we'll be tackling within the next 6 to 8 weeks. So I'm hoping to be seeing more guys come online. So it will be we did June, April. It will be our third class. So 2 classes I've already done. They're already trading and they're trading well. So you guys are the third class now. So this is what we'll be tackling. This will be our manual. I'll be sending it to you. I'll be touching on terminologies on Forex. I'll also be doing orders. I'll be able to calculate, we understand what are the order types, calculating profits and losses. That's basically, because at the end of the day, we have profits and we have losses in this business. So I'll also be doing professional Forex trading and what it's all about. I'll also touch on fundamental analysis. And then I'm also doing, I hope I'm visible. Yeah, I'll also be doing price action. So I'm really good in price action and analysis, price action trading analysis. And then we'll introduce introduction to charting and charts. So for today, I'm just going to go through the basics of what we'll be tackling. And then I'll also tackle what is a Forex trading strategy and how you gotta get yourself one. Also, we'll look at the mistakes and traps. There are very many mistakes and traps that guys face during this trading period. And then I'll also touch on what is technical analysis. So, and then how to make a trading plan, psychology of Forex trading, and the rest. So this will be the last part, psychology. This is usually the hardest part. And most guys lose not because they don't have a good winning formula, but it's because their psychology is not well in tune with the market. So psychology is when you make money and when you lose money. The feeling that comes with it, basically that's what it's all about. Then, so let's start with the basic. So the basic mostly is what is the Forex market. It's where banks, businesses, governments, investors, and traders come to exchange and speculate on currencies. The Forex market is also referred as the FX market, and usually is also known as currency market or foreign exchange market. So it's basically exchanging. Like if you go to the market, normal market, you're going to exchange your goods for services. You're going to buy maybe bread with 50 shillings. So you have to give that shopkeeper 50 shillings for the shopkeeper to give you bread or milk. So the moment you do that, you have taken part in the Forex market. So Nelly, welcome. So I think I've shared the link of the group. So let me update guys who are missing out, because I wanted us to have a good introduction. Then we'll be having these ones through. Just a minute. Okay, doing so. Thanks. Just a minute. I'm having a lot of traffic online. So class ongoing. Introduction now. Okay, let's continue. So let's recap. So I was talking about professional Forex trading. So most people come on this market thinking they're going to make a quick buck. And that's usually the mistake. They end up losing the first account, the second account, the third account, and eventually they give up. They'll say this business does all work. Me, I've been doing it for the last 11 years. It's been working. I make my living through Forex full time. There's nothing else I do. It's in my DNA and grind. So, and I would love to impart the same knowledge to you. And mostly psychology will account for 75% of your trading success. So basically, this is usually the hardest part. So let me just introduce the basics. I think these basics, most of us know, as I was talking about the shopkeeper and you buying bread or milk. So there's an exchange that happens. Or when you go to the market and you want to buy some groceries or, you know, some food stuff, you need to carry cash for you to get the goods and services. So the moment you do that, you're exchanging your money for goods and services which you're going to go consume. So that is basically what happens. So the Forex market is a market like just any other. It's Kenya doing business with the US, US doing business with the UK, UK doing business with China, and all over and all over. So every country has their own exports or imports, or there's what we produce. Like us, we are known for tea and coffee. Probably Germany is known for cars. The US probably for technology, Facebook, and the rest. And then we also have China. China, they are known for manufacturing. Most of these appliances, most of these household goods, most of them come from China, even clothes. Most of those designer brands, iPhones, most of them are manufactured in China. So basically the Forex market is where banks, businesses, governments, investors, and traders come to exchange and speculate on currency. So every time you're spending money, wherever you're spending, just know you're taking part in the Forex market, whether indirectly or directly. If it's locally, it's within that country. If it's the shilling, we are looking at the Kenyan GDP. We are looking at how much money or how many jobs we will create. So the more we do that, the more we spend the money, the more, of course, the currency will gain value. So the Forex market is also referred as the FX market, currency market, foreign exchange currency market, or foreign currency market. And it's the largest and most liquid market in the world, with an average of 5.3. So this value has gone up right now. It's around 6.6 or 7 trillion because of the stimulus checks that happened last year. There was a lot of money pumped in, especially in Europe and the US. So it's also open 24 hours a day, 5 days a week, with the most important world trading centers being located in London, New York, Tokyo, Zurich, Frankfurt, Hong Kong, Singapore, Paris, and Sydney. So I usually pay a lot of attention to the first two, London and New York, because once I know where mostly the trades are moving, then the rest follow. So Tokyo is important because of the yen as a safe haven, but we'll be talking about that later. It should also be noted there's no central marketplace for the Forex trading. Instead, it's said to be conducted over the counter. Over the counter means if you have a comp, or let's go back to the shopkeeper. When we go back to the shopkeeper, the moment you exchange, it's over the counter. The moment you go with those dollars, you'll exchange at the counter, OTC. But now, over the counter means we have moved digital. Digital, that is to mean we have moved online. So with your computer or smartphone, wherever you are, you can make those orders OTC, as long as you're connected to the internet. So it's not like stocks, where there's a central marketplace with all orders processed like the NYC. It is a product quoted by all major banks. So Forex is a product. So the moment you see this, let me introduce you guys to this. The moment you see this, we call this, this we call this an MT4. So I'm just going to show you the US economy alone. So the rest we'll tackle later, but this is called an MT4. So this is the product. You can see this is Euro USD and the price is here. So this is a product being quoted by all major banks. so that we can be able to get the best price. So it's quoted by all major banks, and not all banks will have the same exact price. Now, the platform takes all these feeds from the different banks and quotes we see from our broker at an approximate average of them. So this is our broker. You'll need a broker like us. Tigerwheat is who we are. So that we give you the best price or the best spread. The moment I click on this, you can be able to see there's an order here. I've double clicked on my right side, so I can be able to sell or buy by the market. So this is our product here. So it's a digital product. So let's continue. So we see, so they will make the market for you. When you buy a currency, your broker is selling to another. So that's why you will see a chart like this one. Mostly there's buys and sells. You can see buys and sells, buys and sells. So when you're selling, someone else is buying. When you're buying right now, someone else is selling. So that is why there has to always be an equilibrium, so that at least we have a lot of liquidity in the market. So when you can see there was a big rebound on this pair. So let's go to our real history. So at least those ones I'll be explaining to you practically as we continue how the market works or how the broker makes market for you, so that at least you can be able to make money, because we need more liquidity and we need more people in the business to make money. So a little history. Okay, it's a bit, let's see how we began. So it will be a bit boring, but let's go back to the background. So it's some basic background knowledge of the history of Forex to know a little bit of how it exists and how it got here. In 1876, there was something that was established, and it was called the gold standard, gold exchange standard. It was implemented. It said that all paper currency had to be backed by gold. So let's have a look. This was how long ago? So this is 1876. 1876, this is before, oh, that's some 100 years ago. 145 years ago. Also, guys, if you have questions, you can always ask. So our chat is open, so that you don't get, just a minute. Oh, it's here. So Q&A. Welcome. So you can always leave your question there. I've typed, at least to start the conversation. So let's continue. So I was talking about the history. So something called the gold standard was exchanged. That was 145 years ago. So that was to mean every paper currency had to be backed by solid gold. The idea was to stabilize world currencies by pegging them to the price of gold. It was a good idea in theory, but in reality, it created a boom bust, which ultimately led to the demise of gold. So the gold standard was dropped at the beginning of World War II, as major European countries did not have enough gold to support all the currency they were printing to pay for the large military projects. Although the gold standard was ultimately dropped, the precious metal never lost its spot as the ultimate form of monetary value. So even today, gold has never lost its spot as the ultimate form of monetary value. So the world then decided to have a fixed exchange rates that resulted in the US being the primary reserve currency. So they decided, now let's have the dollar backed by the gold. This was known as the Bretton Woods system in 1944. So it's good to know your history. So 1944, I think that was almost 50 years ago. Yeah, it's around 1944, 77 years ago. So it's almost some 7 decades before. So anyway, let's continue. So then that was the Bretton Woods in 1944. I know is exactly. So then 1971, the US declared it would no longer exchange gold for US dollar that were being held in the foreign reserves. This marked the end of the, so around 1971, let's also look, that is 50 years ago. So roughly, let's say the market is around 50 plus, let's say roughly 100 years because of computerization. It's 100 years old until today. To date. So it was this breakdown of the Bretton Woods that ultimately led to the most global acceptance of floating foreign exchange rates in 1976. So eventually in 1976, around 45 years ago, that is when now Forex was born. So this was the effective birth of the current foreign currency exchange market, although it did not become widely traded until 90s, because around 90s is when now internet was born, the computer was discovered, and now the civilization we have today. So anyway, let's move on. So what is Forex trading? So let me explain in a layman's term what Forex trading is. It relates to me and you. It's the speculation of the price of one currency against another. It's just like a normal market. When you go to the market in December, prices most likely of clothes will be high. Why? Because demand is very high. Everyone is on a shopping spree. Everyone has saved up for Christmas, of course, and everyone wants to make some money. I mean, everyone wants to shine. Your new outfit, your new sneakers. So it's now the same thing. For example, if you think the euro is going to rise against the dollar, you can buy the pair. So they're traded in pairs. So I'll be showing you, and you can see this is euro USD here. So I'll be showing you practically so that you can understand. And then hopefully sell it at a higher price to make a profit. So if the price is going up, we are buying. Like from here, we would have made a buy, another buy. So we'll be making a lot of profits from this SNMP. So let me go to the euro, because this one is called SNMP 500. It represents the US economy. So let me use the euro so that at least you guys can understand. So this is my euro on 4-hour chart or on D1. Let me use D1 because I can be able to track the trend. So you can see if the market was falling, you are selling. If the market is rising, you are buying. So we are at the lowest point because you can see, let's use H1. Yeah, H1 is far much better because of here. You can see we are almost crossing moving average 200, but these technicals will be dealing with them later. So let's just use 4-hour chart for now. I think that's far much better. So let's continue. So sell at a higher price. So if you are buying and the price goes up, you make a profit. If you're selling, goes back. So basically, of course, if the euro goes against the dollar and the dollar strengthens. So if you bought here and the dollar strengthens, you'll be on a losing position. So it's important to be aware of the risk involved in trading Forex, not only the reward. So most guys just pay attention on the risk. So I'll also be assisting you guys to see the GU. The GU is here, yeah, because I'm trading a lot of the GU, yeah. It's got the pound, yeah, I think that's okay on D1. So I'm waiting for an oversold. We are on oversold on stochastic. So this is a good entry, a very, very good entry on pound for those guys going long. So let's have a look. So there's a risk involved in Forex trading. So that one I can assure you, because of course it's a business like any other. You can lose everything. You can lose all your capital. You're even told by most brokers, there's always a disclaimer down there. The disclaimer is you can lose part or all of your capital. But now that's not the case. The case is the moment you have consistent strategy, you're good in risk management, then of course you can consistently be making some serious good money. So being a Forex trader will offer you the most amazing potential lifestyle of any profession in the world. It's not easy. So let's finish on this because today was more of introduction, not practical. So it can give you a lifestyle or an amazing lifestyle. You love traveling. You love, you have a lot of money. What can you do? What do you want to do with a lot of money? $1 million, 10 million? It's you to decide. Anyway, it's not easy to get there, but if you're determined and disciplined. So for you to really be good in this, you will require a lot of discipline, a lot of determination to get there. So you can make it happen. And here are some of the skills you will need to be able to reach this goal in the Forex market. So you need to have ability to take a loss without being emotional. So this is something I've been really battling with so many clients out here, because they want to make $1 million or 1 million Kenya shillings, but they're not willing to lose. So it's a business. You have to be willing to lose. If you're willing to lose everything, then you'll be making a lot of money, because every now and then at the back of your mind, you'll be having that notion that I can lose. Without being emotional. Without being emotional means it should not affect you. If you lost 100K today, tomorrow you should wake up and have no feeling about it. It's very hard, I know, but that's the reality of life. COVID happened, guys have been dying. We have to deal with that loss. So we are trying to recover. Vaccines are here. Now we are trying to get back to where we were before the pandemic. So confidence, believe in yourself and your trading strategy, and have no fear. So this one, you have to learn to face fear in the market. Most people are very fearful, especially after last year. There's too much fear in their hearts. They're always negative. They're always in a rush. Pressure is up, blood pressure. I'm like, for what? Just face the market. So dedication, becoming the best trader you can be. So you need to dedicate time. So that's why we'll have the next maybe 1 or 2 months. I'll be guiding you guys online. We'll also be having practical sessions on Fridays. NFP will also be trading and all the other economic reports. I have a very powerful strategy to trade news. Discipline, you need to learn to remain calm and unemotional in a realm of constant temptation. So game plan is remain calm and unemotional in a realm of constant temptation. Constant temptation is chances whereby you are buying, selling, there's a lot of volatility, you're trading emotional, emotions are everywhere. Flexibility, I'll teach you how to trade changing market conditions successfully. Even Bitcoin, crypto, we are trading even crypto. So the moment you become good, you can trade anything, futures, stocks, Forex, everything. So focus to stay concentrated on your trading plan and do not stray off course. So for me, I usually wake up, I write my goals, probably in my head, or I'll stick them in my bedroom there. So every day, I'll probably write them somewhere. Every day I'll be focused. If this is the kind of car or kind of house or kind of life or family I want, I'm looking forward to doing it on a daily basis. Then I work and stay focused to achieve that goal every day. Then logic, to look at the market from an objective and straightforward perspective. Organization, to forge and reinforce positive trading habits. So this one will take time because as human beings, we've been wired differently. There are guys who are wired with, they were raised with a lot of money. Others did not get money. Others are hustling or struggling. So this one, to be able to forge and reinforce positive trading habits, you need a community. So I think we have a WhatsApp group. I have Telegram groups. I have so much. I can, expose you to even guys who are trading very well, even the stock markets, even the US and all over the world. So the moment you are within this kind of communities, it gives you more motivation and courage to be able to face the markets and be able to reinforce positive trading habits. Patience. So this is the hardest thing, especially for most people. And I know the way God created us, other people are patient, others are not. So it takes time to cultivate patience. Patience is everything. To wait for only the highest probability trading strategies according to your plan. So this is the hardest thing. Sometimes markets are consolidating. Like, let me show you an example. I'll show you an example on daily. Let me show you on weekly. So this is G on weekly. You can see up, down, up, down. You can see now we are bouncing above the 50 moving average. But when I go to D1 or H4, there was a time there was a lot of consolidation. Let's look. So the beauty of at least this one has not been consolidating. Let me look at the euro on D1 so that I show you guys, because sometimes you have to wait. Yeah, like this area. Can you see this point? This time there was not much money. So the breakout is happening within right now, especially on, let's look at weekly. Yeah. So you can see this time there was not much because you can see the market goes up, down, goes up, down, goes up, down. It's until it really breaks the 100 or breaks the oversold condition is when now you start riding the trend, which seems to be any time now. So you have to have patience. That's what I'm trying to say. Realism, to not think you're going to get rich quick and understand the reality of the market and trading. So this is another thing. You need to have a concept of it's a business. It's like you have a shop, or maybe you're running a business online. You expect probably $10, $20 every day. So that's how you treat this business. You're like, some days you have good days, some days you have bad days, but the good days should be more. So have that realistic view. You're not just coming here to get rich quick. Of course, you can get rich very easily if you have good capital and have a good winning plan, but treat it as a business. The moment you treat this business as a business, of course, you'll be disappointed. Survey, you take advantage of your trading edge when it arises and be aware of what is happening in the market at all times. So this is very important. I'll give you a lot of links, blogs, even videos. YouTube is very also important. Twitter is also important to always get this news and be able to stay ahead of the game of the market. So this is how you make more money, especially when you understand how this happens. So on fundamentals and the rest, self-control, to not over-leverage and over-leverage your trading account. So this is what most amateurs do, or most guys who are not professional. They want to risk everything, putting all your eggs in one basket. So that doesn't really work. So as traders, you can take advantage of the high leverage and volatility of the Forex market by learning and mastering an effective Forex trading strategy. So that's what I'll be taking you through. If you give me more of your time, I'll be showing you how to establish a very strong winning strategy, building an effective trading plan around that strategy and following it with ice cold discipline. So we'll need a lot of discipline. Money management is key. Leverage is a double-edged sword and can make you a lot of money or lose you a lot of money. So if I give you leverage 1:400, like I'm doing you here from Tiger Wheat. So that is to mean I'm giving you more advantage to make more money. So, but if you get greedy and misuse that leverage, of course, you can be losing. The key to money management in Forex trading is to always know the exact dollar amount you have to risk. So for me, I'm usually like, be willing to lose. How much are you willing to lose? With $1,000, if you're only willing to lose $20, that's the maximum risk you can take. If you're willing to lose $500, it's on you, it's your account, it's your money. So basically, know the exact dollar you have to at risk before entering a trade, and be totally okay with losing that amount of money. So this is the game plan number one. If you have $1,000 and you're willing to lose $20 and you lose it, be okay with it. Don't hold on to that amount. If it's gone, it's gone. We usually have this saying, if it's gone, it's gone. So of course, if you're making money, you're making money. So because one trade could be a loser, and of course another trade can be a winner. So it's a 50-50 game. More on money management will be later. So these are the players. This is the market here, our 7 trillion. We have the central banks, the quotes, we have institutional investors, people with their billions in the institution, the hedge funds are here, commercial banks, even our normal banks, KCB, Coop Bank, Equity, all of them, they are involved in this business. Why? Because you have to always go get an exchange rate. You'll have to see that board there written buy and sell and the currencies. So they are also involved in the business of exchange rates. So we also have brokers like us here, individuals, you and me, and also companies. So banks, the interbank market allows both majority of commercial bank transaction of large amounts of speculative trading. Some large banks will trade billions of dollars. So that's why I'm telling you banks are involved. Sometimes this trading is done on behalf of customers. However, much is done by proprietary traders. So if you become good in this business, banks can hire you. You go and trade for them, their billions. And of course, they pay you a hefty commission. Companies need to use foreign exchange market to pay for goods and services from foreign countries, and also to sell goods and services in foreign countries. An important part of the daily forex market activity comes from companies looking to exchange currency. So companies, they have to keep checking the rates and how those rates are operating. So we also have governments, central banks. This is they are really involved. A country's central bank can play an important role in foreign exchange markets. They can cause an increase or decrease in the value of the nation's currency by trying to control money supply. So we have money in circulation and we have money out of circulation. So if the moment COVID hit, there was less money in circulation. So they had to pump more money in circulation. Right now, between now and probably December, there will be a lot of money in circulation. So they will try to control money back in circulation. So we have in circulation and out of circulation. So out of circulation is the money that is in the bank. In circulation is the money that is revolving around the economy. So they have to do that by controlling, number one, money supply, inflation, and also interest rates. So this is the most important work of the central bank, controlling the money supply, inflation, and interest rates, and also employment for jobs and all that. They can use their substantial foreign reserves to try to stabilize the market. We also have hedge funds. They are between 70 to 90% of foreign transactions are speculative in nature. Speculation means what's the probability it will rain today when you wake up, the sun is bright. So probability, they are low, 10, 20% that it may rain. So probability to be sunny is high, far much higher than it will rain. So that's what hedge funds do. They speculate in nature, whether the prices are going up or down. So this means the person or institutions that bought or sold the currency has no plan of actually taking delivery of the currency. Instead, the transaction was executed with the sole intention of speculating on the price movement of that particular currency. So retail speculators, you and I, are small cheese. So we also have individuals. If you have traveled to a different country, you have to, so in tourists, tourism will be high this year because most guys were locked down. Travel, leisure will be high. So the moment you travel or the moment we get tourists from out, or even you yourself, you have to go exchange your money to that currency's country. So you have to go to the airport, bank. You have already participated in what? So every time you do that exchange, you're participating in the foreign exchange market. So we also have investors, investment firms who manage large portfolios for their clients, use the FX market to facilitate transaction in foreign securities. For example, an investment manager controlling an international equity portfolio needs to use the Forex market to purchase and sell several currency pairs in order to pay for foreign securities they want to purchase. Then we also have you and me. Here is where we come in. Yeah, for you and I, the retail Forex industry is growing every day with the advent of Forex trading platforms and their ease of accessibility in the internet. So retail Forex traders access the market indirectly, either through a broker or a bank. And there are two types of retail Forex brokers that provide us with the ability to speculate on the market. So we have brokers and dealers. So brokers, they give you access to the feeds, the platform, MT4, and the rest. Then dealers, now they charge a commission on top of the price obtained. So dealers are also called market makers because they will make the market for you, for the trader, and act as a counterparty. So when you're buying, they're selling. When you're selling, they're buying. Those are the dealers. So and of course, they'll be compensated to something we call a spread. So the quote a price they are willing to deal at and are compensated to the spread, which is the difference between the buy and the sell price. So basically, I think you will see it here, bid and ask. So that's the difference. So let's finish up. So advantages. So at least so this is around 5.3. So let's just put it at 5.3 trillion. So this is why, what's the advantage? Why should you start? The number one, you're still locked down. So you have to be making some money from home. So that's why we come in. So what's the advantages of trading the Forex market? It's the largest market in the world with daily volumes exceeding around 5.3 trillion or up to $6 trillion a day. This means liquidity, which makes it easier to get in and out. So this is a place where you can come in, get in, make some money and get out. So you can also trade whenever you want. There's no opening bell for the market. You can enter or exit a trade whenever you want from Sunday to around Friday. So markets open around Sunday, 1 a.m. our time or midnight, and then they will close around Friday or midnight. So then we have ease of access. You can fund your trading account with as little as $250. As many retail brokers and begin trading the same day in some cases. So straight through order executions allows you to trade at the click of a mouse. Then we also have, you can decide to specialize. Me, I love GU and EU. They're my favorite, as you can see them. This is EU and then this is GU. So I love trading these two pairs because we are looking at the UK and we are looking at the Europe, and also we are looking at the dollar. So those are the three biggest economies in the world. I also check on China, the yuan. It also trades very well. So you can decide to focus on few pairs. Gold also does well, and the futures, instead of getting lost trying to analyze thousands of stocks. So you can specialize. If you love pound or the cable or the Kiwi, the New Zealand, you can decide. So freedom to trade anywhere in the world, with only requirements being a laptop and internet connection. So that's another beauty of this business. So as long as you have a laptop and an internet connection, you can get in on board, open an account, fund it, and start making money. Commission-free trading with many retail market makers. So even us, we have very low transaction costs, zero commissions, and you have everything. Volatility. This is now what interests me so much in this market. Volatility allows traders to profit in any market condition and provides for high probability weekly trading opportunity. Also, there's no structural market buyers like long buyers in the stock market. So when you look at, let's go to New Zealand, for example. So this is New Zealand. So this is a pair I've been following. I really love the New Zealand. You can see like right now we are really moving up. So you can see there's a lot of liquidity. So around this area, this is what I was calling consolidation. So you can see around this point, there wasn't much movement. Then all of a sudden market dipped. Now it's going back up. So what I'll do for New Zealand now, I'll track it with a 4-hour chart. So give me a minute, guys. Yeah, you can see. So I got it around here. So right now it's already up, maybe let's say around how many pips? Around 121 pips. So you can see between now and even from yesterday, let's look at 1-hour chart. So you can see between today, no, just a minute. From now, that's around 56 pips. So that's from around 5 a.m. in the morning. So you can see between now also and between now and the end of the week, because the week will end around here on H4, probably we might get an extra 116 pips. Between today is Tuesday, between today and Friday, 116 to 200 pips for this pair. This is on the Kiwi alone. It's called New Zealand. So you can see it's easy, very easy, very easy. But for you to gain these skills, of course, you have to come and learn. So there is no structural basis. So traders have equal opportunity to profit in rising or falling markets. So that's what I really love about the Forex market. So last year we were selling a lot because COVID hit, jobs were lost. So we were just selling. Then we started buying the dip. So you can show you from, let me show you with GEO. GEO is, yeah, you can see here. Here we were selling. So this was the last year, March, when the COVID hit. So it lost around 1,679 pips. And right now it has gained. Then we started buying up to now where we are. Let's say we are up 1,897 pips. So you can see, you can make money both rising and falling markets. So Well, Forex market is clearly a great market to trade. I will note to all beginners that trading carries both the potential reward and risk. So many people come into the market thinking only about the reward and ignoring the risks involved. This is the fastest way to lose all your trading account. So most people, when they are coming on board, they want to make quick money, which is good. But you need to be a professional like us. Here, you know, come acquire the knowledge, acquire the skills, and for you to be at least be making good money for yourself. You want to get started with the Forex trading market, right? It's critical that you're aware and accept that the fact you could lose at any given trade. So for me, I usually have one thing is like I can lose on that trade. That's one thing before I enter. But I'm looking at the bright side. I can also win. So the game plan is I need to win more than I'm losing. So if I'm able to do that, and then I have consistency, and then I'll be able to be making good money. So for today, I think that's all. Unless I have any questions. Do you guys have any questions for me? So at least, so we are waiting for Gio and GJ, and also New Zealand. So you can see there was a gap, it was filled. So I think now we should be getting back up. And then there's a big W on D1. So you can see there's a big W. So let's track the pairs with D1, because now D1 will be able to show us where we are moving. And you can see we are almost leaving the oversold condition. This is on stochastic and RSI. It's already showing me we have crossed on stochastic. On RSI, we have crossed 20, on stochastic and CCI, we are crossing 100. So that is it for today. So any questions? If there are no questions, so I'll also recommend this website. It's called Baby Pips. So you can go and start having a look at it, because we'll also be borrowing some of our notes from there. Then I'll also give you the manual. I'll send it to the group. This one has everything you need to know on Forex, leverage, and the rest. So next class, I'll send you a link on margin trading, so that on the other class, Monday, on Tuesday next week, we should start on analysis, because now I want us to start on the real thing. So, but the normal rates, I mean, not normal rates, normal, what do you call them, terminologies. These ones you'll have to go through them for yourself, but I'll be taking you through what's a bid, what is ask, cross rate, exchange rate, what's PEEP, and the rest. So I think that's good for today, unless we have any questions. Let me ask any questions for today. So if there are no questions, I think we'll end our class there. So I'll add all of you guys on WhatsApp group. I think we might be 20 or 30. And then you can also have a personal one-on-one with me. We usually have it on Fridays. So every Friday afternoon from 2 to 3 up to around 5, an hour or two, so that I can be able to see how you're doing. So unless we don't have any questions, I think I'll end my class at that. So at least before I end, we have done an introduction of what is Forex, the advantages, the history. Oh, we have one question here. Good. So, okay, good. So at least it's a compliment. So thanks a lot. So I'll also be recording our classes. So today we were a few. I'm seeing we are around 3 or 4. So in the group we are many. So it was our first class, but I needed us at least to do it, so that at least the rest see we have already begun and will be joining us probably on Thursday. So thanks guys for your time. And then in case you don't have any other question, then now I'll leave it at that and wish you guys a lovely day. So guys, wishing you a profitable week. It's a green week, a lot of green. So I'm hoping you guys are making good money where you are. And I'll be showing you how to do it more and more often. So thanks guys for your time, and have yourself a lovely day. So goodbye for now. So bye, thank you. And